All right, we're live for another Quick Tip Tuesday, each and every Tuesday, 8 p.m. Eastern Time. Today's topic is mortgage discount points. What they are, when you should do them, when you should avoid them. So let's get to it. What is a discount point? A discount point is basically a percentage of the loan that you're going to pay to decrease your interest rate. Once you decrease your interest rate, you have a lower monthly payment. So typically, there's 1, 2, 3 discount points that people pay, and that would be either 1% of the loan, 2% of the loan, or 3% of the loan. So for instance, if your loan is $400,000, your one discount point will be $4,000. So that's something to keep in mind. So people may confuse with discount points paying 1% that your rate will drop by 1%. Not necessarily. It's usually around probably a quarter, 1/8, depending where the market is and where the rates are with the Federal Reserve. A lot of people now with rates rising, they are paying for that discount point because they need it to qualify. So I've seen a lot of more people now, it's the new normal to pay for points. So that's something to keep in mind. If you don't have to pay for points, there's what I tell my clients usually. How long are you going to stay in the house? If you're going to refinance soon, are you going to sell it soon? Sometimes it's not worth it because you can pay $4,000, $8,000 to save about $50, $60, $75 depending on the loan amount. And that can take you a few years to recoup that money. So let's say you're saving $50, that's $600 a year. If you're paying $4,000 to save $60 a month, it's not worth it. If you're going to refinance in 2 years, if you're going to sell in 2 years, it's better to keep that money in your pocket for reserves, to fix up the house, for different reasons. So that's why I usually recommend that to clients. So I like to break it down. But for some clients, like for one instance, a client I had this week, they had to pay the 3 points to get a lower rate to qualify for the loan because they were at the limit. If they didn't pay for the actual points, they wouldn't qualify for the loan. So that's the market we're kind of in now. So definitely keep that in mind. The max points you can do is usually around 3 points. The reason behind that, because there's regulations that the closing costs cannot exceed a certain amount. So usually about 3 points is usually the max, around 3 points, depending on the loan amount, depending on the purchase price, and the actual total closing costs. When it comes to seller's concession, if you're getting a seller's concession, you can use that concession to pay down some of your points, as well for a refinance. If you have the equity, you can bundle that into your closing costs, which then will be bundled up into your actual mortgage. Discount points is pretty straightforward for me, of course, but if you have any questions, please let me know. Basically, to wrap it up, I want to keep this short and sweet. A discount point is you're basically paying a percentage of the loan because you could pay half a point or 1 full point, and that 1 point is 1% of the loan amount. The rate won't drop necessarily 1%. It depends on what the rates are. Usually a quarter, 1/8. So if you had a 5.25, maybe you had a 5.0, 5.125, or 4.99, around that ballpark. So it just depends where the rates are, and the loan amount. If you're paying for a point, it can be a greater savings than the $60, the $80. Because I actually have another client, they paid down the points, they paid down the extra percent down to bring the loan amount down because they wanted a specific payment. They wanted a payment of $2,800. So what I told them, I got it done the right way. You have to pay this point, put a higher down payment, and that's where your actual mortgage payment would be where you prefer. Let's see if I covered everything. I'm pretty sure that's most of the topic on mortgage discount points. Of course, mortgage discount points is part of the actual closing costs, and that will be paid at the closing table with any other fees and the rest of the down payment, title fees, attorney fees. I have a better video for closing costs in one of my previous videos. If you have any questions, shoot me a message. You want a more detailed response, let me know. It's not sometimes it's good to pay points. In this market, you're seeing it's the normal now because people to qualify and to keep their rate down and their mortgage down. Have a good rest of your night.